Well, good morning and welcome to this week's Market Carver. Hope you've had an outstanding week. If you're not in Indiana, you are missing the best weather that we ever have. It's September, it's fall time here in Indiana. I could deal with that for 12 months out of the year. It's been an exciting period of time for our family. I hope it has for yours. Got to see my mom and my brother. Mom up from Sarasota. My youngest daughter graduated as a registered nurse. So all sorts of exciting things are going on. But they're also going on inside of the economy globally, worldwide. We talked last week about what was going on in China. This week, it's the wind has stopped blowing, and we now have an energy crisis inside of Europe. And from a seasonality perspective, you're in the worst performing month of the year for equity markets. So we've got all sorts of things that are going on here. I'm going to hit a few of the points. I will remind you the Thirdly meetings are coming up. Please take the time, if you've got something that you want to cover, to send us an email and say, hey, I'd like to hear a little bit about this. We may not be able to get to them all, but we are going to get to the ones that are the most common questions that are out there. The supply chain issues, the inflation issues, what's going on with the Federal Reserve. So let's just start there. When you look at the Federal Reserve, one of the things that Adam and Andrew and I watch are what's called the dot plot. We want to know if the Federal Reserve is leaning more hawkish or if they're leaning more dovish. Dovish means they're going to continue to pull interest rates down. Hawkish means that the intention is to raise interest rates, in this case, discontinue or begin to taper off what is being bought. Now, this morning, and we don't have all the updates on this, but apparently two local governors from the Federal Reserve actually stepped down earlier than they were expecting to. We'll have to see what that does, but the 10-year U.S. Treasury is at its highest that it's been in several months. As of this morning, it was 1.54%. Hard to imagine that's a lot, but folks, it is a lot relative to where we've been. Value and growth are continuing to have these battles back and forth. And we want to watch the things that have the greatest relative value. So if you think about the way we function at the Financial Enhancement Group, my job is to look at that big picture, the narrative. Adam takes care of the fundamentals, what's going on in the valuation. Andrew looks at the technicals. Clearly, until this last week or two, the large cap growth have just pummeled value. In terms of market performance, but as Adam would tell you, not necessarily in terms of value. So when you look at the metrics in terms of where we are, you can kind of see the U.S., the percentile relative valuation using an average of 4 ratios that he goes through and uses. You can look at the current value in terms of where we are and where it ought to be. But understand when you look at that chart, this is a phenomenon that is really across the globe. It's not just here in the United States. Asset size, interestingly enough, we're seeing some liquidity. Typically, when you see market volatility or money leaving a market with a declining value, typically you're going to see more of that occur in the micro caps and the small caps, even the mid caps. It's just not happening. They actually made higher lows rather. So that chart, even though the market was pulling back, was doing well. With the large cap space, not quite so well. This is good news for everybody concerned from a health perspective, and I have to tell you, with the Thirdly, there was a little bit of anxiety. I'm ready to see you guys, to get back and having dinner and doing our thing live, if you will. And there was concern that COVID was going to come back and actually get us so that we couldn't have a live Thirdly again. So far, things are looking good, and you can see this downtick on the chart. That part is looking good. Certainly the deaths and the issues there are in better shape. Now, this does have an economic impact. The top stocks, what you're seeing up there, are companies that are what we would call stay-at-home stocks, and you can see that decline. One of my favorite, the bottom one, Peloton, not necessarily from a stock performance standpoint, but I've got a Peloton, right? I like to spend. And then you can look at the ones on the bottom where you've got Booking, Carnival, Southwest. When you look at the COVID crisis, what is really impacted, and this shouldn't be really as surprising, but it's been travel, entertainment, and dining. Those are the areas that were hit the hardest. It's the areas that you're going to see have the most move as the as the data continues to come in terms of COVID. Now, one of the questions we've been getting a lot in our meetings is what's going on with the government shutdown. Ladies and gentlemen, here's the deal. I'll just tell you, the market doesn't care about shutdowns. You can go back and you can look at the chart from all of the times it's happened. The green ones are obviously when the market's performed positively. You'll notice the red aren't that big of a deal. It doesn't mean that we probably shouldn't care. I'm just telling you, our job at the Financial Enhancement Group is to help you manage the money. And that is a newsworthy story, perhaps, but it is not one that is market worthy. Now, what is going on that's crazy? And I don't know how much you've seen the news, and I hope you don't watch it a lot. But one of the things that happened this week is China actually banned cryptocurrencies. And so if you're not familiar with the volatility of them, there's about 30 now, not just Bitcoin. There's about 30 different cryptocurrencies. And this next chart that I'm going to show you is a lot like what I remember my career when we started the Financial Enhancement Group back in 1997, where people would talk about a monkey, and they literally had them, a monkey could throw darts at a board and figure out which stocks to buy. Well, we've got this cute little Gox box. That's the Mr. Hamster, if you will. And essentially what somebody went through and created is a way for the hamster to walk in, make a couple decisions, then make a couple other decisions, and then he either buys or sells the currency based on what's happening. So far, since I think June 10th, June 12th, he's up like 24%. It's crazy out there in the cryptocurrency. When you guys ask what we think about it, the answer is until I can entirely understand it, we're probably not going to be overly loaded into it. We have had it in terms of some exchange-traded funds inside of some of the portfolios, but right now it is still a difficult thing to be able to get in, maneuver, and manage. And Lord knows it has more volatility than I want in my retirement account, and probably yours the same. We will keep a watch on it, though we probably aren't going to watch the Gox box. Hey, if you want to know more, don't forget to tune into the radio show. You can find us every Saturday morning from 6 to 7 a.m. on WIBC, but anywhere you listen to podcasts. Make sure you go. You can get it from iTunes, Spotify, wherever you want to go, as well as the other radio stations we cover. We really do look forward to seeing you at the Thirdly. If you've got questions or comments, please do not hesitate. Ask them. We'll be ready to answer. Look forward to seeing you soon. Have a great week.